Hello, everybody. Welcome to the Small Business Edge webcast. Today's webcast is sponsored by Melio, an accounts payable solution that helps business owners easily pay contractors and vendors. My name is Brian Moran. I'm CEO of Small Business Edge, and I'm joined by my co-host for today, Barbara Weltman, founder and CEO of Big Ideas for Small Businesses. Welcome to the webcast, Barbara Weltman.
Thanks for having me. I think this is going to be a great program for small business owners.
Oh, I totally agree. And Barbara, whenever I have you on any of the programs that we're doing, people will know that we're talking about important financial matters for business owners. And today's no exception. And the funny thing is, Barbara, you and I have talked a lot in the past that most business owners tend to think of revenue as the only financial concern to their business, right?
Yeah, it's so interesting because our mutual friend, Tim Berry, who started Palo Alto Software, said wisely that his great sales almost put him out of business. And that's because we really need to focus on cash flow.
Right. Cash flow. We're also going to talk about credit rating. And then we're going to weave into the conversation this little thing called time management and how that sometimes is really the only currency that matters in business. And it's funny you mentioned Tim and that, sales being the only area of business that matters. A lot of times business owners will look at sales like they'll look at every problem in their business as a nail, and that more sales is a hammer, right? That if I just had more sales, I could take off this problem, and this problem. And a lot of times that's not the case, right? They're hampered by things like poor cash flow or bad credit rating.
That's absolutely true. So with respect to cash flow, you can have made numerous sales, sent invoices, but you're waiting for payment and you may not have the cash on hand to pay your bills when they come due. So it's a cash flow issue. It's not a revenue issue.
Right. So let's get to that point, because our listeners run the gamut and our viewers, right? There are people who are just starting out in business to people who've been in business for 20 years. So explain to those who are new to business or who may not understand, what exactly is cash flow?
Well, cash flow, as the term implies, is just money in and money out of your business. It's money coming in when you get paid. Now, for many businesses, you get paid on the spot. You make a sale, you perform a service, and you get paid immediately. But many other businesses, they don't operate that way. You submit an invoice and you have to wait for payment. And so you've made the sale, but you don't have the cash flow in until you collect. And money out is expenses. Just because you have a bill coming due doesn't deplete your cash flow. But when you pay the bill, that will deplete your cash flow. So it's kind of a common sense thing to think about,
right.
But unfortunately, business owners don't pay close attention to it.
Right. And to your point, I tell my clients that cash flow is like the car you drive, right? You put gas into the car and then you drive the car and you use the gas. So the gas going in, that's your receivables, right? And the payables are when you're on the highway and you're driving your car to the next destination. This is going to take you to where your goal at the end of the year. And so if you run out of cash, you run out of gas, and then you're stuck on the highway until you can get more gas. That's really how you need to look at cash flow, right? You can't say to the gas station attendant, give me gas today and I'll pay you next Tuesday for the gas.
Well,
Unless you know him.
true. That's absolutely true. But the good thing is there are a number of strategies that you can use to improve your cash flow coming in.
Okay.
So obviously we've been talking about revenue, and so making more sales will bring in eventually more cash. You might want to increase your prices. Maybe you need to do that. Maybe you need to expand your markets. If COVID taught us anything, we see that having multiple channels for selling has really paid off for a lot of businesses who never before thought about being online and or restaurants doing take out, and having multiple channels. All of that is good. I think another thing with COVID is that one of the things that helped us with cash flow were a lot of government programs like the PPP loans, but those are ending. I mean, PPP loans ran out of cash, and some of the other grant programs are in the works, but they're not forever. That's a temporary fix. And so we really have to think of cash flow on a longer term basis and think about that. And on the flip side, another way to help cash flow is, of course, controlling your expenses.
Right.
And here you really got to micromanage every penny that you spend. Think about, I mean, do you really need that subscription? Many of us carry these things just year after year. We renew, and we don't pay attention to our insurance bills. Maybe they're not the right coverage, and we can take a look at that and trim wherever possible, because it's our money and we want to keep it.
That's a great point, Barbara. It's that cleansing. Maybe you do that 4 times a year as the seasons change, spring to summer to fall to winter, that you have a meeting with yourself or with your advisors or your bookkeeper, where you are sitting down and you're reviewing all of your monthly fixed and variable expenses and going, what do we need? What can we get rid of? I think that's a fantastic point.
Yeah.
And how would things changed in my business? Like we always talk about insurance checkups. Maybe I need to increase my insurance coverage because my business has changed.
Also, think about in the past, pre-COVID, a lot of us did a lot of traveling. Mm-hmm. And we've learned that we don't necessarily need to do all that traveling, that we can connect with our customers, our vendors, and such through Zoom and other online methods, and which is a lot less costly than having to get on a plane and have a hotel stay. And so I think there's an opportunity here for reviewing our business practices, and that translates into business savings.
And who doesn't love business savings? But, and again, what we're talking about is cash flow. All of these things can help you with your cash flow. Obviously, the more money you can bring in and keep, the better your cash flow situation. So first takeaway today is going to be review your monthly receivables and payables and determine where you can increase your savings in your business. And that's going to help your cash flow. Now, one of the things that I like about Melio that we talked about off air is the fact that I can float some of my payments, right? So I can pay my vendors and contractors on time with a credit card and then use that as a float, right? I can pay them in the way that they want to be paid, whether it's a check or an ACH transfer or something like that, in case one of my receivable payments is late. I get somebody who said, we're going to pay you on May 1st, and now they're not going to pay us till June 1st. I can still pay my vendors and my contractors. They're not going to know anything about what's going on with my business, but I'm going to be able to float that payment. Is that accurate?
That's absolutely true. Look, if you have the cash on hand, you can just do a bank transfer to Melio, and then they will disperse the money as you explained how the vendor wants to get paid, by check or bank transfer, whatever. But if you don't have the cash on hand, your vendors, your contractors, they don't care about your problems in collection.
Right.
They want to be paid, and they should be paid on time. And then you can do this with a credit card, and they don't know this. And so you get the benefit of the float on your card. If you get paid before you receive your credit card statement, then great, you pay it off and no problem. But it's a financing tool for you. Now, some small businesses have lines of credit in place, but not all small businesses do. And this is a very convenient, automatic way to have the money that you need to pay your bills on time.
Right. And if you have the right kind of business credit cards, you may be getting cash back, or you may be getting points or miles or whatever to help your business. Right. That's
It doesn't hurt. It doesn't hurt. It's a little bonus there.
Right. And note that I said business cards, because we talk a lot, Barbara, about the importance of not commingling your accounts, right? Keeping a business account, business credit card separate from your personal.
Essential. It's uh, not only because of it makes sense and then you can track what's happening, but
Right.
also when it comes to tax time, it makes it real easy to separate what's a business expense and what isn't.
Right, right. All right. So the first thing we talked about was cash flow, right? So revenue is important, absolutely. But doing that checklist on your business once a quarter to make sure that you are maximizing your receivables and you're minimizing your payables. So do that checklist and see what you need and what you can get rid of. Kind of like a quarterly cleansing. I love that idea, along with an insurance checklist so that you make sure you're covered in the event that something happens, especially if your business has changed in any way. And we talked about cash flow and how that works. Let's talk about credit rating now. Oh, that's kind of one of these. A lot of times I get clients who will say to me, how come this business is doing so much better than I am? I mean, there are the same number of hours in a day. We run very similar companies in terms of the product or service we offer, but they just seem to be having a lot more success than I am, and they can't see it. How does credit rating play a role in a company's success?
There are really two aspects to this, and I think that business owners may not really have thought about this. And we're all familiar with our personal FICO scores when we
Mhm.
when we needed a home mortgage or personal car loan.
Right,
That our FICO score mattered because it matters whether you get a loan and the interest rate that you pay. Businesses have credit ratings as well. They're rated by Dun& Bradstreet, D&B, and Experian, and other rating services.
hmm,
And so it will help if the business wants to buy something, a piece of heavy equipment, for example, for a contract, for a home construction company or something.
hmm.
That's going to influence whether you get the loan and how much you pay, and whether the owner has to personally guarantee. So if a
Right,
business has a good credit rating, the owner's personal guarantee isn't required. Let's put it this way: the CEOs of the Fortune 500 companies are not personally guaranteeing. Apple. Tim Cook isn't personally guaranteeing Apple's loans.
right, right.
Yeah. Okay, but that's kind of, we kind of know that. But what many business owners may not know is that if you're doing business with another business, they're going to check up on you, and they're going to check your credit rating and see if you're a solid company. They'll only do business with a solid company, and a solid company means a company that pays their bills on time. And they don't need your permission to check up on you. They can just go to these credit rating services and check on the reliability of the business, so that they can assume if you are the kind of business that pays your bills on time, you are the kind of business who's going to come in under the terms of the contract and meet the terms of the contract. And so it matters in getting customers.
And that's a great point. Or being part of a supply chain. That if somebody who runs a supply chain and you want to be in that system, that you're adding your products or your services to this supply chain mix, they're going to look at it and say, our chain is only as strong as its weakest link. What is this company doing in here that has a poor credit rating? I'm worried about them paying their bills and being in a position where they can afford the inventory that they need to buy. And so maybe we need to swap them out and put in their competitor.
I think that's exactly right. I think it's going to influence whether you can get customers.
Right.
Big businesses, big, large, and small, want to do business with you.
Yes. So credit rating is a critical element of your business success. And so when you look at, go back and look over the past 2 or 3 years and look at why you got business versus why you lost business. And sometimes the answer is not always so clear. It could be one of the things that Barbara and I are talking about, the ability for you to be an integral part of some kind of program. If you were part of a larger supply chain, if you were a subcontractor to a prime contractor, they're going to definitely look at your credit rating. So that's critical, and it all ties together. It all ties together.
Absolutely.
And a lot of time, don't allow yourself to play the role of the victim. Oh, I couldn't pay my bills because my clients didn't pay me on time. No, nobody wants to hear that.
Nobody cares. Nobody
They
cares.
don't.
That excuses don't matter. So
Right.
you have to have this ability to pay your bills on time.
Right. And play the what if game. What if my client doesn't pay? I have a big check coming up next month in my business. What if my client doesn't pay me for 30 to 60 days? Things change. Things will invariably, your payables probably won't change, but your receivables can. And if that happens, the first thing you need to do is call the people you owe money to and explain your situation. Don't put your head in the sand. Don't wait for this thing to blow over, because Barbara, what happens if you have payables that are net 30 days and it's the 31st day? Is your phone starting to ring from people you owe money to?
Well, I don't owe money to people because I pay on time. And one of the reasons I pay on time is that we have a tool such as Melio, which allows me to pay my bills on time and not worry. And
Yeah.
if I have to pay, if I have to actually, in effect, finance on my credit card, well, that's what I'll do. And that will maintain my good credit rating, maintain my relationships with my customers, and it's kind of a no-brainer.
Right. So, these are all great points. So, I hope for you viewers and you listeners that you're taking notes about things that you should do today in your business. In the United States, we're at a point now where we're starting to, this grand reopening of the economy, where businesses are going to be fully open, fully functional. Hopefully the consumer demand is there. I think it will be, but that's not the point where you start to think, okay, what tools, what services can I incorporate into my business to help me run a better, more effective, more productive company? Now is the time that you need to be doing that. So that's what Barbara and I are imploring you to do today in the next 30 days, is to do all of these things. Look at your cash flow, look at your credit rating, look at the relationships you have with your customers and your receivables. And if any of them are in a position where you might have to extend, you might have to finance your contractors and your vendors, at least you're in a position to do it.
That's true, but I think there are several other points to consider. For example, I just think business owners we've been talking about this, but I really want to drive the point home that cash flow, 82% of businesses that fail, it's because of cash flow.
Mm-hmm.
So it's really the number one reason that will put a business under. So we don't want that.
Mm-hmm.
The second thing is that if you use Melio, if you use it's really can be a time management tool as well as a financing tool,
Right.
because you can schedule one time your recurring bills, such as your rent. So then you don't have to keep inputting the information and spending your time on this every month. And then another point that I didn't want to overlook was, if you're doing with Melio, if you're doing the bank transfer, if you're paying by bank transfer, zero cost. It's not costing you anything. There's no fee, there's no commitment, there's no subscription. You just do it.
Right.
If you have to go the credit card route, there is a fee. It's a 2.9% fee that you pay. I will mention it's tax deductible because it's a fee, a business. So it's not really 2.9% if after tax. But again, it will solve so many problems that the cost is minimal.
Right. And these are great points. And in certain cases, you may be paying interest or late fees on your payments if you miss them.
Right, right.
But
And I know, just as another point, that many of us, when we send out invoices, we'll send out net 10 days, net 30 days, and maybe we'll put a note at the bottom that, oh, if you're late, there's going to be a 1% per month interest charge. I
right,
have never seen a business pay that interest charge. So
right,
don't waste the ink that, for printing it.
right.
Just, so that's not an incentive or an inducement to other businesses to pay you. And so,
Right.
but we want to employ good business practices, and we want to be pay on time.
Right. So, and that's the time management part that we were talking about, that, with a product like Melio, that it allows you to almost automate your recurring charges, and that you can set it and forget it. But the point that I also want to make is that when you do get that receivable in, that you pay off that credit card. Right. Otherwise, it's one, you won't have the credit there when you need it. And two, you're going to incur finance charges on the credit that you're carrying that you probably don't need to pay.
Yeah, and they can be hefty. So you do want to, but again, we're talking about a float here. So yeah, you have a little leeway. And if it's a month that you had to finance, it's not a tragedy. So it's just as
Right.
soon as possible.
These are all options. These are all
Right.
options to running a business, and that each business owner is going to need to review. In a high margin business, you won't feel that float as much as it were if you were in a low margin business where every percent matters. Right. But in either case, let's be smart about your business. Let's be smart about your cash flow, be smart about your sales, be smart about your credit rating, and be smart about time management. Because as I like to say, time is the only currency that matters. And in the end, we all have the same number of hours in a day. And the ones who use their time most productively are going to be the ones who get the best ROI at the end of the day. Excellent. Barbara, how did I even forget this? We were talking about fixed and variable expenses.
Mm-hmm.
A great point to make is the fact that with variable expenses today, we're seeing a lot of costs skyrocket because of the fact that the consumer demand wasn't there last year, and a lot of the manufacturing facilities had to close down because of the pandemic. Right, like an example, like the lumber mills were shut a good portion of 2020, and then when they reopened, they only were open to a partial capacity. And now, with the home market soaring and new home construction way up and whatnot, and people putting in fences and other things, the price of lumber is almost 200% higher than it was last April, and building materials are 100 to 200% higher than they were last year. And so, as a business, as you run your business, you're looking at your variable expenses each month. They could be going up significantly.
They can be a lot higher than when we made we made an annual budget, probably.
Right.
At the end of 2020, we made our budget for 2021, and it's really tough to stick to a budget when the cost of the items you're buying are skyrocketing. And so I think the point that you're kind of alluding to is that we have to stay on top of these things.
Right.
That these things, it's great to make projections, but you have to watch your cash flow like a hawk. Some people I know people who check their cash flow every day, and there are tools to help you do this. Some people do it on a weekly, monthly basis. But again, keep revising your budget in accordance with changes in your expenses and your revenue.
Right.
You may be benefiting from this great demand now, and so
yeah. Well, if you're a lumber supplier, but yeah, so that's a very, very important point to make. If gas prices go up, if your cost of goods sold go up exponentially, you're not going to have that built in to your financials. So, and again, that might be another reason where you're going to have to, use a product like Melio to help pay for your vendors and your suppliers or your contractors until you get your receivables in. So one more takeaway for you today, Barbara. We're in the home stretch of our webcast, and this always happens to you and me, where
We
we're
run out of
talking.
time.
Right, and we want to let our viewers get back to their businesses, but we left them with some good takeaways today.
I think so. And I think for everybody who wants to learn more, they can certainly find me at Big Ideas for Small Business. And through there, you can find my Twitter and LinkedIn and Instagram links. Also, you will say yours, but I think the highlight here is to tell everybody to go to melio.com to learn more about this payment solution that can really be a help to your business.
Right. Melio.com. Melio.com.
Precisely.
Right. And people should sign up for your idea of the day. And they would get a brand new, idea of the day, 365 days of the year.
Correct. And it's free. And just sign up and you get it a 1 or 2 sentence tip for the day in your inbox in the morning.
I love that. And people, as they know, who follow my webcast and my podcast, Brian at Small Business Edge, you can always email me and give me your feedback. You're very good about giving me your feedback, suggestions, topics, questions that you have about things that we talked about. So please keep those coming. I love those. And I love hearing about you and your businesses. Obviously on Twitter, you can find me at Brian Moran. So any way you want to get a hold of me, feel free to do so. And let's talk about small businesses and ways that we can help you run more efficient, more effective companies. And we're out, Barbara. This was great. And I look forward to having you back on very soon to talk more about topics that will help business owners. Thanks again to Melio for sponsoring today's webcast. And we look forward to seeing everybody on another Small Business Edge webcast very soon. Have a great day, everybody.